I would see it at that 404.10.
Say hi, YouTube.
Hi, YouTube.
How's it hanging out there? Make sure my scenery in the background's not all convoluted. My kid's been setting stuff on the couch behind me, and it drives me nuts when they use a couch as a flat surface to store things on. Yeah.
Laundry.
Yeah.
Yeah.
Yep. All right.
All
Here we
right,
go.
look now.
Right to.
Yeah.
This is where I said I was going to complete the height of that wick.
Yep. Let's see. That's
404.10.
that pivot.
Here we come.
Yep. Come on.
See,
Touch
this
that
is where I
4.
jump the gun and just pull the trigger and buy versus waiting.
No.
Right.
Wait.
This is a trap.
It hasn't hit it that yet. It hasn't
Yeah.
hit that yet because right now you got the cup and handle look, you got the M top look, but you also
Now
got
we're
a
pushing
couple other looks.
404.18, but this is where you would rather not chase this. You wouldn't want to jump the gun on that. You'd want to
No.
wait for the signal.
Does that look like a triple bottom? That wouldn't be a triple bottom in this area, would it?
Not like that.
I mean, it has a
And
look.
this has that traditional cup and handle play. That's already done.
Okay. Yep.
Now we just wait for
There
the
it
next
goes.
signal.
There it is. Tell me, where is it going, Jeremy?
Well, let's
Go
see.
look at my picture.
Run into your shadow box.
I put it in that picture. What did I say that breakout was?
Yeah,
Come on now. And what it's going at right now is that 200. You see, I'll listen when y'all talk.
404.50.
When you teach, I listen when Sig teaches. That's where I got that shadow box measurement from.
And when you're trading a 10-second chart and a 5-second chart, these little moves are great. These are hard to get unless you recognize that there's a consolidation here. And then we were expecting an M top. We were waiting for the signal. We didn't get the go short signal on the M top. We were actually looking at. Whoops, I did it again. Click on the chart, then adjust the time. There we go.
Well, let's see what the next 5-minute bar does after this one, because I can tell you right now we are bullish, but we are only 2 bars into that being above the moving average. So let's see what happens here.
It's oh so nice to see our friend again, that 200 period man.
Hello, 200. How are you? So yeah, it's right. It's about top of that box. If you look at that picture I put in earlier.
I call it my moving pivot. It's just always going to be accurate.
I love that saying again. You don't have to know everything to take profit in the market. You just have to know enough. But the more you learn, the better you'll do.
And then the other part of that is like, you go and learn all the complex stuff, learn how it all works, and then find ways to simplify it, at least to yourself, because all those moving parts, all the knowledge of those moving parts, if you're scalping like a really short term, like even the 1 in 5, you don't have time to go and measure all those moving parts.
No.
You got to simplify it in a way where you can take action now, and that's where your skills develop. Is you learn to simplify it. So when you see like these shadow boxes, that's a great way to simplify it. You see the size of the move, you see the expectation of where the pivot is and where the point of control is to set that same height onto the next move to project it. That's a simple strategy. You've suddenly got
I use rectangles.
Right. You've suddenly got a way that you can save yourself from wasting so much time doing all the math and just have a visual right there, be like, aha, I know where this is going to go.
Right.
Okay,
now, I've got some nastiness on that chart, but I just put that other picture back in. So if you look at the 4 pictures I put in, if you take the second and the last one and you look at them, that's the second picture was where I was explaining that, the top of that box was and so on and so forth. And I'm not sure. I drew a price line there. And now you can go look at the last box and you can see we made that move. And what did I do? I used a couple of little lines to draw a little wedge. I used a little shadow box to make rectangles. Man, you can make money drawing lines and rectangles.
Pretty much.
Mullen's pushing.
All right, so we've got a half measured move leg actually that also took place. And like I said, there's many ways to look at this. We got the mini cup and handle. Where I stretch this out, there's your previous peak, there's your bowl, It ran up just to the sidewall, pulled back to the point of control, and I had that line drawn long before we knew what this was. That's your point of control. Bam! Came right back through resistance. There was your signal, long, and in this case, it exceeded the previous peak. It usually will fill the wick on the first high. This one went a little bit beyond. It went all the way up to the 200 period. Cool. You can ride that on momentum. If you know where your target is and you see it continue, doesn't mean you have to close a trade right there. You can just continue to ride it. That's not FOMO. That's just riding the momentum. And if you're rocking that 5-second chart, it was pretty easy to see. This little gap right here between these two candles on the 1 minute, that was a consolidation on a 5-second chart. That was a nice little bull flag. All right, so there's your trend. There's your pullback. There's your trend. Bull flag. Boom. Right up to 200. That was this bar here. Now we're wicking that 200, rejecting, rolling over. There's a little M top. You got a little short signal. Run it. It's just a matter of finding what the setup is telling you on the longer term charts and then trading it on a shorter term chart. You can go any way you want on this. In this case, this would be a futures day for trading. You can scalp around in the options on SPY with today's price action, but it's not going to quite be as fruitful as it will be if you were trading futures today.
Let's see.
There's a lot of moving parts in options too, and there's ways to simplify that as well. And we've been finding the sweet spot on our spreads to look at for day trading spreads instead of day trading direct options. So we're
Kudos on that.
able to minimize risk to a point where it's like our leverage is very, very big for the amount of money we're putting into it, and the percentage is where the game is. You'd never expect something that you paid so little for to achieve maximum profit, but it's a percentage game. Like you risk $1 and a dollar wide spread, and then you're able to sell it for $2. That's 100% return. You know, have 150, 200 of those. That's substantial. Later on in life, when you've got that account size to do so safely, hell yes. In the meantime, practice it. Build that skill. Hone that skill on a small account, and it will absolutely blow you away at how simple that can be. It takes a lot of the time wasted figuring out all the math on a straight options trade. It takes that out of the equation because it nullifies most of its time exposure or time decay. It nullifies a bunch of its delta swing, but all you care about is the percentage.
All right. This is nice. I like this. Now we
Hey,
wick.
Jeremy, if you're starting to trade that in really large volumes, be careful. Don't go over 390 on Webull. Otherwise, you get classified as a professional trader, and then your fill orders get adjusted. So
Really?
It's not going to be like as quick as possible. Yeah, there was something they put out recently about that.
Whoa.
Do you go on the 390 contracts?
Yes.
Yeah, I know.
Like in one trade?
I know Robinhood limits me to 500 contracts per trade, but it doesn't limit me to how many I can trade, so I can just do it in blocks.
Oh,
I'm just
okay.
saying that I read something where it said if you trade something like 390 options a day, then you're considered a professional trader.
Yay.
Wow.
Oh, wow.
Okay.
Wow.
Good to
wow.
know.
And then they adjust your orders. Wow, good to know is right.
I love how they write rules to keep us under their thumb, don't they?
Well, we have to find the loopholes. Like AVXL, I called out to you earlier. I don't know if you have that one on there. You do? You know, you don't. AVXL has looks like it's that zone I was looking at earlier, penny stock, but it's in the.
Oh yeah, nice little roundy.
Yeah, it crossed, but it looks like an inverse head and shoulders, doesn't it? On the 1 minute.
Yes.
No?
A little.
A little.
Stretch it
But
up.
that's a good, you know, look, I'm not saying go run after this thing, but once a penny stock gets over like $5, they're fun.
Yeah. There's
You can't trade as many, but they're fun.
two targets in play here. There's one right here. Oh, where's that? 1185, we'll call it. And the next target, just look for the control bar right there. 1230, are you kidding me? Sweet.
One other thing, and this is, you know, something I look at. I'm going to put another picture in.
Amazon chucking a bear flag at us, breaking over.
Dang it, Amazon. What, Paul, you done messed up our Christmas.
Right. Apple's kind of
We're s-
rolling too here, so
We're supposed to have a good Christmas. We're supposed to have like bullishness. Come on now.
oh, I know what this is.
All right, so I'm putting up another picture because there's another thing I look for. In that last shadow box in this picture I drew, you'll see the little rectangle, long rectangle, and it comes from that last bull bar of that trend right before the wick into the 200. That last bull bar, which is the biggest bull bar of that run from the red doji at 10:06. This is on the SPY. And if you look at that last green bar, that's the biggest bar of all of those bars that were there. So that tells me we're going to have a little rest. Of course, we've got the wick into the 200, but look at that shadow box that I drew right there with all the moving averages where you had those 1, 2, 3, 4 dojis. That is the base of that candle and the wick, which wicks into the previous green candle. When I see those things happen like that, big bars with a wick into the previous candle, that whole area becomes very interesting to me, and it becomes an area of support at this point. That's what price had to do to continue to move forward for me. So it hit that area of support, it wicked into it, wicked into it, wicked into it, and then based into it, and it's pushed up, but we still have a little wickiness. So we could expect another retest at 404.46, or if it fails, we're coming back down to at least 403.61.
Right.
Does that picture make sense to you if y'all are looking at that? I hope it does. That's the in-betweens I've been talking about. I call it the in-betweens because, I don't have typical stock language.
I'm drawing
But
new lines.
That's an area it needs to hold.
I just wiped everything off my chart to start over.
Wow.
There's 3 radiuses here that I just realized were there, and I went to draw them, and I'm like, I can't see those for crap through my basic pivot points everywhere. So,
Hey, Jeremy. TOPS 1 minute chart looks like a triple bottom.
I might better scalp that bad boy after all. All right.
Daily today, would you redraw your chart? Because of and a day, sort of like 2 days ago where things went crazy. Would you redraw or would you just add to it?
If it gets to the point where you can just your chart's so cluttered that you just can't see anything anymore, dude, just redraw the important stuff and get rid of everything else. Yeah, I'm constantly wiping my chart clean and starting over. And I'm looking at different control areas right now based on yesterday's price action and the price action for the week here. There's some interesting things I'm picking up here, and I might be able to put this together in a moment here. Price is rejecting right off of here on the 15-minute chart, by the way. Let's draw this out in reference. And as flat and skewed as this stupid thing was, it's just another diamond pattern, yo. Yeah, we got range. I wonder if there's any big economic events happening next week. I'm kind of curious now.
Investing.com is great for that. You can go get the free economic calendar. I mean, it's right there. You can go to investing.com and you can pull up like the latest news. Of course, all the news for us is delayed unless you pay for it.
Right.
But the chart tells us everything. But they do tell you like what's coming up next week. You can go like day for day, hour for hour. And it's generally the times I believe are in market time no matter where you are.
Okay. Well, here's our diamond pattern. I want to see if I can find a couple other lines to draw here. 1, 2, 3, 4. That's already there. Okay. We've got bull targets and bear targets. This gap down was, just news-driven. Jobs data was not appreciated by the market. We've got some points of control to be interested in. Let me switch to pivots here. I'm going to try and dirty up this chart as little as possible because it has been a mess for too long now. I needed to just wipe it. There's a
Again, there's long periods of sideways motion.
there's a point of control here between 403 and 402 and 403, and then there's an extension to 404. And I'm just drawing pivots based on yesterday's, or sorry, the day before yesterday, that big rally. I'm just drawing on those points of control on a 15-minute chart, roughly. I don't have to be very tight with it. Just to kind of know where our key pivots are, know where our range is, and then we just go and adjust time frame down until we can see where our range is. So if we remain bullish, we break this pivot, we've got extension to run all the way up here to, I hate how it drops price off the column over here when I hover around pivots, but come on, Webull, fix that. Like 106 is possible today for a bull target, or if it rejects here, it's already at that 66.7 or whatever the heck the fib level is of this bar. It's right there,
Yeah.
rejecting.
Yep, it rejected it at the 66% level. That's exactly right.
So if we
I
roll
did that
over,
on the quant tool. Here we go.
if we roll over here, it's just a matter of printing a couple more trend lines. And if I roll up my trend spider, you'll see it.
Went back to test that zone earlier where we had those, where I drew that little rectangle. I think we just blew right by it. We're in it right now.
Bam, point of control
Going
bar
back
right
to
there.
this. Yep, there it is.
And I love Trend Spider. It doesn't draw diamonds like I do, but it definitely draws relevant lines. And notice how we've got this busy convergence right here. From all of that price action from yesterday, I was starting to draw just the important radiuses on my chart. Those are all lining up, but they all converge right here. That's your point of control. 402 pivot is the likely target for everything. That's where the decision for the day is going to be made. So if we come back to that 402, we're going to look for either bearish momentum or bullish momentum. And if it breaks bearish there, where does that thing hit? Right in here from that rally. What's this look like? Big ass M top. And this is all in play. So when you get those M tops, that's your point of control. And one of two things will happen. It'll come back, revisit that pivot, which also happens to be 50% of this rising wedge. Duh. Okay. It can come just under that pivot and round down to like 400, 401. It might revisit that first and then pause and then bounce back up. That's possible too. The other scenario is sometimes these things will drag out for the rest of the day, and then this isn't in play until like next week, so like Monday or Tuesday. So let's kind of look at that scenario. Let me draw it on a 15-minute chart with Trend Spider. Maybe it'll show me. There's other points of control in here, and that's what I'm getting at. So we've got an angular support here at about 401.50. It's kind of halfway between that 402 pivot, 403 pivot, which I drew from this control area here, right? If we go sideways today, that's what's likely to happen. But this is still in play. We still got unfinished business here. Think of this like a gap fill. So if it gets bearish from there, it'll likely close that gap down and visit 395 again. Or if it's going to accumulate here and build out into a bullish move, this sets up for a descending channel, and then your bullish measure move takes you to that 406 or 407 pivot right here. And what they've done with Trend Spider here is they've added point of control. That's what this purple line is. See, it says POC, point of control. There's your VWAP down here. This is 15-minute chart. So your point of control is still in play. And knowing where that is important, because if this becomes a measured move instead, 1 hour chart should show it. Then it just becomes as if this is just one giant Busby. All right. So then we go back up to the breach, test that 410 again, and then where do we go from there? Well, if it becomes a measured move setup, we start heading for like 420. Pretty crazy market. We've seen it be crazy. This big old rollover here stopped, short of into the point of control right here and bounced out. This can repeat. This is what we're seeing here in miniature. It's just a little bit shorter time frame, but it's the same setup. So we had this massive bull run accumulation. It came back, tested a support zone or a control zone, and moved on. It melted slowly, but it moved on. That can happen too. That's the second side of this scenario. So either A, we retrace back to point of control, or B, we accumulate here and run on. The market wants to be bullish. People want to see the bottom. People want to buy the dips, whatever. We don't care what they think. We just care what the chart tells us. And as choppy as this trend is, it's still intact.
Jeremy, you drew all that?
No, this is TrendSpider. This is all automatic.
Oh, I got scared. I'm like, oh my god.
Yeah, TrendSpider draws automatically for you. That's the beauty of it. It does all that drawing that I do, that it takes me a lot of time to put in. It does it all for you. It's just one other tool to use to save time. Like I've been saying, like by the time you get everything drawn out on your day trading charts, when you're day trading that 5-10 second chart, you don't have time for all that math. No way. You just got to react and do. This does that for you. And I don't know if they have a
You have
5
to
second.
put in like a formula, like Excel or something like that, or it just automatically does all that stuff, and you just got to know how to read it.
It just automatically draws it. And then you can go and you can actually add more lines to this. Like I can go up here, see where it says trends. I can click on the drop down, and I can go into down here where quality. I can select all lines, and then it's unfiltered. Look at all that crap. So like when you see my charts end up looking like this. They legit do. And when you see a line that you like, there's another thing you can do. When you see a line that you like that you know is being respected, or one that's important anyway, you double click it and it'll keep it highlighted for you. Like this guy right here is a radius that I'm looking at. Double click that, boom, it highlights it in white, keeps it on all time frames. It just does the dirty work for you. I haven't figured out how to clear it all yet, but I do know I can go and back to here and reduce it to like most relevant lines, and it'll clear up a bunch of that noise for you.
Is there a key that shows you like what everything means?
I don't know that there's a key.
Maybe an instructional video on YouTube or something?
That's what we're getting at actually. Next week, their representatives are going to come and show us how all of this stuff works. Next week, actually,
That's a
on
big bull
Wednesday.
bar on the 1 minute.
Yeah, there's another pivot line here, right here. So,
And I don't know. Sorry.
but it's they do offer. I think they let me think here. Do they offer? I think they offer an extended free trial if you want to check it out from the link on our site. I think they offer an extended trial still. And also they're going to come out with a even better discount for us next week when they do visit. They're going to talk about that too. So lots of good stuff going on with TrendSpider. I
was just wondering if there's like a tutorial on YouTube or something that shows you what everything means, like drawing. I know you guys are busy doing one, but there's got to be, I guess, if you search.
As far as figuring out what all the lines mean, or as far as figuring out, okay.
Yeah, like
So
the most important lines and all that stuff.
you almost have to reverse engineer that. So like whenever you see me drawing lines, they're important because they're just trend lines, and to know what they mean is to actually reverse engineer it, figure out where they came from. So I'm looking at different time frames and adding different lines to my chart. Like here, if we zoom way out, let me go to a 4-hour chart. Sorry. We can see that this is just a big part of an angular resistance here from a descending trend that SPY's been in forever. And
Looks like a bear flag on the 15, doesn't it?
we're just under that. So we know that, typically these descending channels, the meaning behind it is descending channels tend to break bullish and retrace 50%. And if you go to the daily chart, you'll see exactly what that looks like. Here's your descending channel. It's already drawn for you on this app. We've hit it 1, 2, 3 times. The retracement target would be right up here to about 430. Pretty simple. If it breaks out, that's an extension target. That's what I'm getting at, is if this becomes a measured move and we just melt out of this, that's where it's going.
How do you that retracement line that you just said? What are you looking for to get that 430?
I'm literally looking for half of the trend. So half the whole trend is going to be right about 430. Basically, I'm just using my eyeball to kind of dissect this whole trend in half. And actually, that can extend even higher to about 435. Just looking at.
So you did a horizontal on the third top in that descending megaphone.
Right. Let me draw it, because you can actually draw on their charts too. Let me run it at 435 and see what it looks like. What the heck happened here?
So you're saying if we go up to that 430 and test it, and if it pops, then we're going to go bullish.
Right. And we know the typical rule of like when I'm showing you guys on the day trading data, like on a 1 and 5 minute chart and a 10-second chart, when I'm showing you these channels and how they typically react when they've been broken, that's usually the typical target. A descending channel usually breaks bullish and hits about a 50% retracement. An ascending channel will typically break bearish and hit a 50% retracement. So it's just kind of knowing the rules and then stretching it out to a longer time period. So everything you see on those short period charts or short time frame charts is an opportunity to learn how these patterns play out in general, and then you can take it to any time frame and apply it. Go back to a 1 minute here.
Yeah, I'm just I'm trying to figure out. So I spent a lot of time yesterday fiddling with debit spread, like estimations and stuff like that, because I told you I sent $25 to Robinhood.
Right. So for those, we're trading them. We're either day trading them or we're overnight swing trading them. So with those, all you need is a direction. So like if you see a pattern, and Blind Trader just mentioned, look for broadening formations. We have one here. So when you see those broadening formations, you can kind of predict whether it's going to set up another leg within that formation or if it's going to break that formation. And if it does break that formation, when you do find a broadening formation, you look for a center line. And when you see that center line, called the regression line, at that point, you'll know if price is going to bounce off of it. When you do, typically you'll see that it will make a measured move outside of that broadening pattern. Let me switch back to my chart so I can show you what I mean.
Yeah, I was looking to like, so yesterday it was the 6th for
Right.
SPY, and then today it would be the 7th. And what sucks is if I was able to get money in my account yesterday, I wanted to do a 393 put, then I would have woken up to some nice little profit.
Right. It wasn't cleared yet, or it should have. Usually.
No, it's going to take 7 days because I don't have good deposit health.
Oh, okay. So, yeah, when you've made your first deposit on Robinhood, they'll typically give you instant access to your deposit because they know it's good. But yeah, when you haven't done anything with that account for a while, they might have a waiting period for it to settle and make sure before they do that. Yeah, I'm sorry about that.
No, it's not your fault. It's my fault for losing 24 grand on there and not going back on for 2 years.
2 years might do it. Let me see something here. So I'm looking at.
Sorry. So I love leaps. It seemed like, why can't you do the same thing with leaps? Because it seemed there was only like a $10 spread on like years out for all kinds of stuff.
You absolutely can. You can do leap spreads. And anytime you can do a spread, you're going to mitigate a lot of your risk because, like I said, both those contracts move together. But for instance, let me look at a leap spread about 6 months out on SPY.
Look at I mean after SPY, but so obviously when China back opens and my love affair with Alibaba,
Yeah.
um, there was a lot of good ones, and I mean they're gonna open back up eventually.
Oh yeah.
Uh, so it was like, and it was crazy. It was like $300 cost, and your profit was like $20,000. Like it was like
Yeah.
it was crazy
It's incredible.
for all debit spreads.
So I'm looking at, you know what? Let me look at a I'm going to go way out of the money. I'm going to go with a 435, 440 spread on SPY in June 16th expiration. I just want to put it together and see what it looks like. So it's a $5 wide spread, way out in time, way out of the money. Problem is, the premium that you're gonna have to put into that spread is going to be a very large portion of the spread itself. So understanding how a spread works is critical here. The width of the spread is kind of where you're trapped. Your gains are never going to be more than the width of the spread itself, less the premium that you pay to own that spread. So if it's that $5 wide and you spend about $2 to open that is what I'm looking at on the chart or on the options chain, I'm risking almost half the width of that spread, and if it fails I can lose half the width of that spread. So my maximum loss is about $200 in a $5 wide spread, which is that total chunk of that spread is $500. And if I'm risking $200 to make $300, that does not compute with my risk strategy. I won't do it. So when I'm trading a spread, I'm not going to do leaps unless I can see an opportunity to at least get to my comfort zone, which is about 8-1 on a $5 spread. So actually, it's a little bit less than 8-1 because a little bit more than 8-1 because I'm actually looking at 40 or 50 cents in a $5 wide spread is my ideal. Meaning I'm not going to risk more than $40 or $50 in a spread that could potentially be worth $500 to mitigate my potential loss. So if SPY continues melting down all the way through June next year, I'm never going to see any of that for profit. It's not worth it to me. So what I'm looking for in my criteria for trading spreads is not necessarily leaps, but I'm looking at shorter terms. I never really trade spreads more than like I try to aim for a little bit more than 30 days out if I can. 45 days out or more is just not there's no point to it. Sometimes if I'm expecting very short-term volatility, I'll trade them even shorter. I'll trade them like a week or two out, just depending on what I expect from it. And then with these dollar wides I've been doing on SPY, I'm doing no more than an overnight hold. Oftentimes I'm day trading them, so I'm not really worried about them getting anywhere near being in the money or anything like that, even though yesterday's pretty much did, or the day before yesterday's pretty much did. I'm looking for the percentage in return. I'm looking to literally trade that spread and not give a damn what it does after I'm out of it. So I'm looking for short-term growth on that. If you're looking at running a spread as a leap, they can be profitable, yes, but the risk to reward ratio just does not compute because you're sitting on a big what if and you're putting a lot of money out to do so. That being said, there is a way that you can trade a leap that acts as a synthetic long position or even a synthetic short position. Meaning you can go and buy a single option leg out, 6 months or more, which is typical standard for a leap. It's 6 months to a year or so, or more. But you can go and purchase that as a synthetic long position, whether it's call or put, and then sell the front month against it. So let's say I go and I buy a 430 call out in June expiration, and I go and I sell the front month against it. I go and sell like an expiration, let's say December 30th, I think is the next one. Against that, I can do that. However, there's one important factor to pay attention to when you're doing that is your break even. You've got to figure out what it's going to cost you in premium plus the strike to break even on that long contract if you get a sign on a short contract. So that 435, let me go look at the difference here.
We might wind up with a trend day here, a slow grinding one.
I think so.
Coming
where
back to that 404.74 area, which is a pivot.
That's where I've got time to talk.
The
Go through some
break-even up
strategy.
There's the pop. There's the pop.
Yeah, so the break even on that actually there's,
I never understood break evens because I was doing naked all the time, so I didn't care. As long as it went up or down, I was making money. I didn't care about a break even.
right. And it's just important to know if you turn something into a spread that's a calendar spread, or if you're looking for making sure that you're not losing money should you get assigned is the key to focus on there. There is no 435 strike on SPY there. Oh yeah, there is. Sorry. Okay, so let's say I bought a 435 call. The break even on that thing is actually 448.65. So the premium I'd have to pay for that thing is $1,364.65 currently, and it keeps fluctuating. So if I was to go and sell the front month against that, I would be having to sell something so stinking far out of the money to cover that break even that it would not be worth it with SPY. However, there are equities out there where you can make it worth it. SPY is not one of them. And I'm going to talk a little bit about this in the wheel trade strategy thing that I'm kind of building videos with money.net, and I'll get links to those today, about yield. And when it comes to trading synthetic options positions, if you're going to run a synthetic long position and sell calendars against it, yield is the important part. And if you look at the current premium price on something that would even come close to that 435, my goodness, you would probably have to sell like a 450 call against that, which is worth 7 cents December 30th expiration. So the difference would be like not even close to worth it. SPY is by far one of the worst yields you can think of when it comes to wheel trading, and it's also the worst yield you can think of when it comes to calendar spreads. But if you're certain that it's going to have a long-term trend, you can certainly make money on it. It's just going to take forever. You're going to have no chance of a high-speed return on this situation. It's going to take time to build that. So like you're talking selling an option for $7 when you've got like $1,300 invested. That kind of doesn't make sense to me. But I look at an equity like Ford's actually a pretty good one, where I can go and take a long position on the stock for what currently $1,400. Let me look at Ford. At $1,393, so about $1,400. I can take a long position on Ford, and I can sell weeklies on that thing for like $20 a pop out of the money. And if I get a sign, my cost basis is under $14. Let's look at the chain on that. So the yield on Ford would be pretty high actually compared to the stock price. So let's see here. Selling a December 9th call, I would probably sell the 1450 is the first weekly out there. You bet about $9 or $10 for it. And simultaneously, I'm going to have to outlay double that. So I'm going to have to outlay, $3,200. Sorry, yeah, $3,200 to have the ability to sell a put out of the money as well, because I want to generate income on that as well. My total yield on a weekly would be about $15. But if I go 2 weeks out, my yield would actually be a little better. It'd be about $30. So compared to the amount of outlay I have to put out, $37. I'm going to take that $37 and weigh it against my total outlay and figure out what the percentage is for yield. The percentage is going to be the difference between how much money I have to lay out, how much money is each dollar in the amount that I lay out going to earn in yield? And if it's better than, let's say, 6%, cool. If it's not better than at least 3%, I could do better just cramming my money into an account that's paying interest and do it that way in monthly yield. But I'm talking about 2 weeks. So in 2 weeks I'm going to yield like 6%. I'm okay with that. If in 2 weeks I'm going to yield anything more than that, awesome. Same goes for synthetic positions. If you're selling calendar spreads, you got to figure out what the percentage of the yield is, and that is not good on SPY, but it's great on forward.
Just broke through.
Oh, we're looking at SPY. Sorry.
I saw an ascending triangle on the 5 minute and the 1 minute.
Yeah, it just broke through that pivot again, that 404.74 area, real strong. We've broken that 66% area too.
Yeah,
If it's a trend day, it can go all the way up to 407. Am I right?
Yeah, it could do that soon, actually.
let me extend this a little bit.
406.74, which is a price line I drew yesterday off of one candle, one control bar, is about where that big sell-off took off, the 406.72. And I've got that line right there, and that's the next line I have. But I didn't go far back.
Actually got a channel.
AVXL, remember that inverse head and shoulders I talked about?
Yeah, did it break out?
Oh, yeah. It's already back in the 13s.
We've actually got a channel with a regression line here. I'm going to make this thing bold and stand out a little bit. There we go. Here's our regression line. We've broken out above that. Now, if we get to 406 right here, 406.50 roughly,
Might reject.
it might reject there. And also the thing to know is if it does not reject there, this can set up a measured move channel break. And this is tagged 3 times. Your measured move comes up like a 50% channel retrace. We can extend to 408. You guys are absolutely right.
Yeah, look, Bud was calling some stuff the other day.
Yeah.
Yeah, if I only had money to make it work.
Oops. Go to the 5-second chart here. And a 1 minute. Let me build my grid back up again. I get off on a tangent sometimes and I start talking about options. I love talking about options.
No, that's good. I'm sorry. I was trying not to interrupt.
You're fine, man. But I love options trading too because it's like I spent a lot of time learning a lot about options, and it's weird because I got all into trading futures, and I didn't forget a lot about options, but I just kind of got off my game, or got off my practice, and coming back to
I
it.
appreciate you doing it.
Coming back to it, it's awesome because I'm actually able to go back and get into some of these complex positions that are just mind-blowing how well they work out.
It's just so confusing at first.
It is. There's a lot of moving parts. But the break even on that, you got a little more reading to do on that for sure. But break even is going to be very important when you're starting to look at like calendar spreads. Also when you're looking at the wheel trade. You want to know if your break even on the short leg that you're selling is going to be higher than your cost basis on your long position. So you've got to learn a little bit about break even to understand how that part works.
And it's a big wick on the 15-minute. 30 minutes still looks like a bear flag.
Amazon has stretched a wedge out like no other, but it's looking like a bear flag to me.
Whatever I touch turns to rust.
No,
It doesn't. It's just getting it. You're
it's
asking the right questions.
It's what a lot of people who have a lot of experience trading call it traders tuition. It's the amount you pay while you're learning. And
Well, I have paid about
for some, it's a lot.
between crypto and this, we're looking at like 80 grand probably.
Ouch. That's a steep tuition, but now learning is going to be important, because if you learn how to trade that all back, basically, don't be revenge trading for sure, but if you learn how to trade profitably and just take little base hits over and over and over again, trade small, trade often, eventually that'll all come back.
Yeah, well, it's not 80. I'd say probably like 60-ish.
That's still a chunk of change.
That's a span for like 3 years.
I'm the inverse of that as far as my example goes. Like, I started stupid small. I literally opened an account with $5. I'm not joking. And I grew that amount to a respectable amount. At one point, I did add to it so I could day trade without worrying about PDT. And then I discovered a cash account. So then I went, okay, the hell with that. Let's pay off the house. So it comes full circle for me, because I started at the bottom and worked my way up. And I know there's a lot of people who started with a chunk of change and whittled it down while learning. So the difference is, like, I learned to trade, and the first thing that I had to learn was how to trade frugally, meaning I didn't take big risks. I just very, very much kept my risk management in control. And that's why futures scared me for a minute there, because my risk management was not in control trading futures. And that's why I'm still just taking my time getting back into it with my new TradeStation account. It boggled my mind at first to discover that, when I had my first successful run trading futures, how fast that account grew. And then it took me a minute to really assess the risk I was taking to do so. And it just made me step back and be like, whoa, I got to reassess this and make sure that I don't make any mistakes. I worked hard to really build the amount that I have to trade with now, starting with $5. I don't want to give it all back. And I certainly don't want to give it all back in one account just while I'm learning something. So I reverse engineered myself in the way I learned, compared to what most people do. Most people throw at least 10 grand into the market and lose it before they learn anything about how to trade frugally and figure out how to slowly take these small trades and build that account balance slowly. Everybody wants to get rich quick, and you got to get rid of that mentality. You cannot think that way. You have to think base hits, just roll with it, repeating base hits. Don't even look at your account balance if it helps. Just keep slowly building, winning trades, and eventually you won't have to stress about your account balance. You'll just like, cool, I'm making it back.
I just read a TA book recently that was you only make trades with 2% of your account each trade.
That's been kind of a rule of thumb. Even when I was day trading options and taking positions that equated to 10% of my account balance, and I was okay with losing 30% of that risk, because it equated to about 3% of my account balance in that loss. But that was
down. Sorry.
Yeah, we're coming down in a bearish measured move on the 5-second chart right here. There's your trend. There's your accumulation. This is your half leg already. But anyway, like I started backwards from where everybody else did. Like, I went and started small and just slowly grew that account. I learned how to trade like I've been living from paycheck to paycheck, because I had been. I had to make a budget work. Raising 4 kids is not cheap, and mechanics make decent money, but raise 4 kids, what money? So it kind of is humbling to look back on that and realize, dude, I started with nothing, and I made something out of nothing.
Yeah, it's pretty cool. It sucks because nobody sees all the work you did. It's just you come in, it's like, wow, this guy's amazing, and he does nothing but win, and you're like,
right.
Like, if I could only, and it's just And then given that I have a full-time job that I'm not leaving, it just makes
Yeah.
it harder.
It is
Well,
very
that's what
hard.
makes Jeremy so good because he's done that same thing, and that's what
Right.
makes it so. That's why I love
Just-
listening to Jeremy and Sig because they both done the same thing.
Just that we
They have
started in
fruit.
different places.
Yeah, started in different places, but
You
both
know.
started small when you were working a full-time job.
And to boot, compare yourself.
Admirable.
Compare yourself to Al Brooks. Mind you, he was a surgeon and making significant money, but he straight out admitted during that interview that we had he lost money for 10 years straight before he figured it out.
Years, thousands of dollars.
Yeah, tens,
But he had
20s of
thousands of dollars
Yes,
because
disposable income.
of his trade. That's why when you watch his videos, and you have a small account, you have to equate. Wait a minute, this guy's talking about this long of a stop. He's got the ducks to do that.
Right.
Somebody who's got a small account of $300 or like 150, you can't do a 10 stop, a 10-point stop. You've got to
No.
keep your stops tight,
Yep.
really tight, and really get in on those channel breaks. But anyway,
No, you're right on point there.
oh yeah, y'all were having a good conversation. Sorry about injecting.
No, not at all. And it's
Um,
just you put yourself in Al Brooks' shoes. I mean, you're starting with your full-time job. You love that job. You know, you've got some income that you can put into the market and learn to trade with. But just reverse that thought for a second and just realize now I need to learn how to trade frugally. I've paid my dues. Now I got to get it back. You know, and it's just going to be slowly, a little at a time. Learn how to be consistent above anything. You know, you watch a guy like me who's put in the work and you can't see that. And like you just said, you came in and like it's hard to watch somebody who just seems to not lose. I still lose a trade every now and then. It's just I cut them so fast I don't care.
You're still 90% win rate.
Right. So
That's
It's-
unreal.
it's hard to watch, and I understand where you're coming from on that. Believe me, because for a while I was like looking at some of these people making thousands on single options trades, and I'm just like, what are they not showing me here? What they're not showing me is their losses, and I realized that. And me, I'm just sitting here making frugal little scalps here and there, adding them up, little base hits. But my ratio is phenomenal.
Yeah,
Got a high batting average.
it's centimeter steps, and it's a hard thing to do because for such a long time, all you did was see people that just absolutely know nothing, just get rich.
Right.
80 grand here, 70 grand here, 90 grand here. This meme stock, that meme stock. Just go along, and you just it just wipes you out. I mean, it's the same thing with crypto. It's the
Right.
same exact thing. And
But you-
Because for 13 years we had a bull market. That market's
Right.
gone. That buy and hold market's totally gone
And that's
for the
why
moment.
That's
For the
why
moment.
that's why it's so lean now. Everybody's afraid of this market because they went in, they made money and they didn't know anything. And now they can't trade it. I wonder how much of it they gave back, you know?
I did. So this is what I found. I found a January 19th Leap 2024, 50-cent wide spread for $10, 4-1 for Amazon.
That's actually reasonable for Amazon.
Yeah, it's 172. It's far out, but it's a year.
Let me pull that off real quick. That's something I might even hold on to.
But yeah, I was just bored at work yesterday. I was just looking at all kinds of different ones. There's great ones if you go far out that were only like $5-10 apart, and the profit was crazy.
Let's see, January 2024, you said?
Yeah, it's the only one in January.
January 19th, 2024. Okay, cool.
You buy the 172, sell the 172.5. Cost is $10. You make 40 if it hits, or 4-1 basically.
Amazon's got the kind of clout to do it.
That's why I was looking at Alibaba because it's just so beat. It's just destroyed.
Right. So it's actually a 50-cent wide. So 172.50, 172 is the strike spread. Let me see. That's actually 50-cent wide. So you wouldn't want to risk more than a couple bucks in that. But I saw it as a total debit of 3 cents right now. So that's actually reasonable on a 50-cent
Oh
wide.
yeah, I guess I don't get how it works yet. I
So-
thought the closer the strike spread, the better.
You could actually do a dollar wide. You want to have some distance between the two legs if you can. So like if you do the 172, 173 in the same date of expiration, that's only 6 cents. That's even better. That's like trading my dollar wide SPY spreads for couple $3. That's right in the sweet spot. Is about $6.
Why do you want a wider spread as opposed to a
Um,
smaller?
It increases the ratio. So like you're capped at 50 cents. So that's $50 wide. And if you're risking $3 for a chance to make $47, it's still reasonable. But for just a little bit more risk, double that risk, you can go for $100 wide and risk $6 instead of $3.
Oh, I get it. So that's why I kept seeing like that's like $1 or $2 on SPY and you get $98.
Right. And that's if the whole thing goes in the money at expiration, and that's your max profit.
But I mean, off of $2, if you make 10 or 15, you hit a grand slam.
Right.
Right.
And it's like the other day when I bought that spread for $1 and sold it for $9, I made 800% on my dollar investment. That's incredible.
Right.
So, it's like
And I made 300 on $4.
Right.
And I should have taken the 400%, but I couldn't get my order to get filled.
right.
But that's like, so once you get to a point where you have a larger account, you spend $100, your possible profit is insanity. But if it goes up 900, you make $900.
Right. So it's like the whole key to all that is controlling your risk to reward ratio. Yeah, Razor. I actually traded something that was just stupid cheap, and I was still in the experimental process of what spread's going to work for what move. I'd already collected a total average of 250% on the put spread side of that just a little bit before J-Powell picked up the mic. Let's reflect on that chart because this was amazing.
I like the choice of words. Let's reflect on that chart.
So I carried overnight a short position on SPY, and it was in this price action. I was able to open 10 dollar wide debit spreads for $2 a piece, and I traded 4 of them out, took profit down here for I want to say that was I sold those at $5, so that's $2.50 per divided by 4, whatever the percentage was. It basically made more than I had. I sold 4 of them, held on to 6 of them, and the profit I made covered the remaining 6 spreads with a negative cost basis of like $1. So later on in the day, when price came back up, I was able to add 2 back and still maintain a zero cost risk on the puts that I had, right? So the next day I was kind of like sitting here at break even on the open. Because the delta was so low, a move against me wasn't going to do much. And I look at delta in that way. It can work with you just as fast as it can work against you. When delta's stupid low, it can't work against you fast enough. You can usually get out of the way before you take a loss. When delta's high, if it moves against you, it can ruin you real quick, but it can also make you money real quick. So the delta shift is where price gets closer to the money on the strike, delta increases with it. So if your delta is increasing, your potential profit is exponentially increasing with delta. So your risk can actually be doubled, tripled, quadrupled in time. Long story short, I was able to profit out of all of those puts right in here. And in this, I actually added some call debit spreads. And the call debit spreads were 409, 410. If I scroll up in the chat, I can see the picture. It's 409, 410. I want to know the expiration on it. Hang on, I'm getting there. There it is. Bought the 409, sold the 410, paid $1 risk in each of those. Okay, there was barely any premium in those, and they expired on the sorry, not the 6th. They expired yesterday. So in that run, after J-Powell picked up the mic and basically told us we're all good now, the market loved it. That position ran up. I was able to close it before the market closed, right when the price was right around here after this little pullback, No, it was actually here. I had to run out of the house to go pick up one of my kids at 3. So it's right in this mess. I closed that position for an 800% return here when price was at 403.50-ish. And it sucks because that was a killer percentage return. You know, I sold those at 9, so I made $8 profit on $1 risk per contract spread. I looked at them again as I picked up my kid, and they were selling at 33 cents here. So I could have had like a 3,000% plus return on that same position. That's the kind of thing I'm talking about as far as price movement going. When you get a ripper like this, and you can get into those dollar-wide spreads with just a silly amount of money, like very, very, very dirt cheap, your leverage is still there, and the width of that spread caps your gains. But it being a dollar wide, I mean, it could have been, you know, max profit if it would have expired in the money or been in the money at close, and it damn near was. I would have got max profit for that. Could have gotten like $98, $99 for those if I left a little meat on the bone. That's insane. And then yet the next day, it opened and touched 410 for a moment. Those would have still been in the money even though they expired this day. I still could have had a pretty nice return on those. I'm okay with that. But the percentage that you can get is where the magic is. So I'm looking at using very, very minimal risk to make potentially huge percentage returns on it. And when you do that in size, you do that, 10 of them at a time, 20 at a time, 30 at a time, whatever. Even in a small account, you can make that magic work. But you've got to be right on the price action, and you've got to be right on how much time you need for that to be out in order to find a sweet spot where the risk reward is worth it. And I'm still playing with that, but I'm writing about it as I study it, and I'm putting out an article pretty soon here to get that all figured out for you. But in the meantime, that's the probability of being able to make a killing return on a move like that. And all it had to do to achieve more than 100% return was the underlying price had to move $2. Literally $2 turned that into from a $2 risk into being able to close a bunch of those at $5. Pretty impressive.
This is going to sound wacky.
Sure.
How does $100 max loss sound and a $24,000 profit?
That's insane. What are you looking at?
I mean, it can do it because it's been up there before. So it's a leap on Baba. $5 wide.
Oh yeah.
$5 wide. If you bought 50 contracts for 100, it would cost you $100. And your max profit is $24,900 at a 290 break even.
Wow. Yeah. That's pretty wacky.
If you spend $1,000, you could be making 250 grand.
Right.
And I don't going up to 300 because I had it when it was at 300.
Right. I don't know that I would put that much risk into it, but I mean, it almost would be worth one or two if it had a lot of time under it.
Yeah, it's got a year. I mean, it's a whole year. I mean, if they even sniff of ending lockdown, I mean, it's going to go up at least 50 points.
Right. Yeah, good point. I mean, that's a bit of a YOLO, and that's what I'm talking about right now. Is this little $1 wides? They're kind of a YOLO play.
It was a $5 spread, and what was the cost? It was $15 each. For January 19th to 2024. But I mean, if you're sitting there and you're bored or you're doing something, you just want to look around at debit spread profits. I mean, there's just wacky ones
There are some YOLOs, and I've known people who've gone and done stuff like that and done very well with. Back when SPY was still in the endless bull market, I had a friend who went and when SPY was trading, this would have been before the pandemic lockdown. Back in this mess where it was just slowly melting up, he was looking at 225, 230 spreads, I believe, if I remember right, while it was trading at about $175. And this is when I was just first starting to look into trading. This was just before I started trading, actually. This is in 2016. I didn't start till 2017. Um, he went and risked. I want to say he risked 5 cents per dollar spread in that neighborhood, and then he also had some that were $5, where he risked. I want to say it was like 40 or $50 per spread in leaps, and actually, it ended up trading in the money about a month before expiration. He made a killing on that. So yeah, it's possible, but you've got to have a really good handle on what the long-term trend's looking like. SPY is kind of like in a zone where it's like, I wouldn't do that now, but
No, I mean, especially when you got people. I told you about that doomsday. The whatchamacallit, somebody bought like 50,000 puts or something
damn,
for next year. Something absolutely insane, basically like a doomsday hedge.
wow. On SPY,
Yeah, down to I think it was like 318, 300,
jeez.
maybe even below, maybe in the twos.
I mean, it's possible if this shakes out to be just a really big ass bear flag, and it can. We've seen double bottoms when they fail, they break over big, dude. We could see it hit that. It's pretty nuts. I mean, this market has been artificially inflated for so damn long. It's got to unwind some, and it's done a lot already, but it could do more.
Michael Berry's calling for it, so
Yeah. And there's a lot of long-term headwinds in the market, and this is euphoric right now because everybody's like, oh, this is going to be the recovery, and I don't know, man. The only thing that's holding the market up, in my opinion, right now is inflation. When dollars worth less, stocks are worth more.
I think the death knell will be Putin using some kind of ridiculous weapon.
Yeah, it could be.
Have you guys read Anti-Fragile?
Yeah, life is fragile, man.
Have you read the book Anti-Fragile?
I haven't read that one actually.
I think you would like it,
I'll have to check that out.
based on my limited knowledge of knowing you online. But I think just based on, talking market and all that stuff, you would like it.
I think I'll check that out. I didn't quite get the title. It was breaking up on your audio. Something fragile.
The newest one is Anti-Fragile. It's Nassim Taleb. He used to be a risk and volatility expert, and now he basically just talks about everything from medicine to the markets to airplanes to whatever. And he predicted, or not predicted, but he was like screaming from the rooftops about the crash, and was basically like vilified, but he doesn't care. And he wrote like 4 books. Black Swan is one of them, and it's a series.
Crazy. I'll have to check that out. If you wouldn't mind, kind of DM me a link to that. I'd definitely check that out.
Yeah, for sure. He's got a ton of talks on YouTube too, and I just took a long drive and was getting through Anti-Fragile, and it was just like talking about how we prop up these markets, or we prop things up instead of kind of letting them build their anti-fragility, because he says even robustness and resilience, anti-fragile means you actually grow from the chaos or grow from the struggle.
Right. And it's like, the gist of it is like when a government tries to regulate and control a market at the same time, the market's like no longer free. Well, we're still sitting here able to trade it, but it's manipulated by the powers that be. I mean, that's indirectly or directly, it's kind of the same effect.
Yeah, exactly. You have a power that basically is not government, but is government, that regulates the price of money essentially,
Right.
with a ledger, with a click of a button, and does it based on what, like, essentially it's like being one of those parents where you fix everything and control everything. It's like then the kid grows up and is very fragile instead of
Right.
you have to have some sort of protective barrier. You have to guide them, but not to the point where you jump in and it's like, hey, you banks squandered money. Here's more.
Right.
I don't know what would have happened if they just let them off.
Let the free market do its thing, and it takes care of it usually. Yeah, I see what you're saying. It's like they inject cash, they inject all this, they control all the. They try to maintain stability in the market when the market is by itself designed to maintain its own stability if you just let it be. I see exactly what you're saying on that. And then you got what you're seeing on the chart is literally like you're seeing human emotion, whether it's algo trading or not. It's all based on people's, what people think of the market and what people think of the equity. It's literally that. So I mean, that's what is it? It's emotion. So you're looking at how people feel about different things, and you look at it on a chart, and you're just like, okay, well, it's predictable algorithm at that point. But looking at it long term becomes harder and harder when it's been controlled for so long by so many different factors. It's like there's a lot of it taken out when it's artificially pumped like this. Like this whole session of QE, it stands out like a sore thumb. It's reaching above its general curve. So the growth on it is exponentially faster than it should be. We should expect this to have kind of slowly curled up and kind of made a slow angular line upwards over this amount of time instead of having all of this control. And then there's calamities and effects here. We had the lockdown here, market tanked, whatever. It rose back up too rapidly. I think it should have probably plateaued at that 50% and just slowly trended from there. It should have been, pushing maybe make to $400 instead of making it, all the way up to like $475 almost. So you look at history where it was not as controlled. We can dig way back here. Even in a dot-com bubble. Let's expand that. So you had your stupid trend. Everything was just exponentially growing, right? There was a little QE involved here. I don't have the inflation data to compare it to, but look at before. It was flat. There wasn't really much action before the startup where everything in like 1994, 95 just started going ballistic. I mean, the percentage in this, look, $36, that's 100% in just, a little over 2 years. That's insane. So it had to come down, and it did. It came down to about where the curve should have been. So if you go back and you were to slope this naturally, it would have eventually met right at the area where it found support. So now we look at the market today, and we've got, this massive chop here. Where did it come to? An area of support. I bet if I was to add let's see, how many days are in a trading year? 52 times 5, just roughly, we'll exclude holidays. So we've got like roughly 260. So if we ran instead of running a 200 period moving average, we'd run a 250. Sorry. Lost my number, lost my thought. 260 period moving average, we would see about what the natural slope of the market should have been. And that's what we get when we get moving averages. It's averaging everything. But if you average it over time and you expand that time to about what the annual rate should be, you'll get a number where you should be. Let me go into indicators. MA. Okay, let's just change the length of the 200 to 260. That puts us in that target right around 335. I think that's about what you were saying. Those doomsday puts were sitting at.
Yeah, it might be way lower. Like it might be one of those crazy ones where it was like in the twos.
You know, we stretch that out to a monthly 260 period. Hang on, let me see if I can get it to work here. God, I don't have enough data for 260. It starts here, but it gives you an idea where the slope is. Good grief. I mean, that would probably meet somewhere around like 230, 240. That's insane, but hey, I wouldn't knock it. You know, this is a lot of fluff. A lot of fluff. And a lot of us have been saying this for years. We say, you know, look at how much QE is hitting the market and what it's doing to it. And then, you know, comparatively, like you look at inflation adjusted prices of things, like where they should be if you were to account for the amount of our fiat currency's inflation over the years, bringing that value of that dollar down. Comparatively, I think gold last year or the year before was at like $25,000 an ounce inflation adjusted. I haven't even looked to see what it is now. I'm afraid to, because we've got massive amounts of inflation over a short amount of time from the pandemic here, where they're just printing money like crazy. But what's controlling the price of gold and silver? Well, the central banks have basically did everything they could to stabilize the price and keep it adjusted to where it's somehow reasonable so that industry can keep on chugging on. Where does this snap? Something's got to give somewhere, you know. If it comes out to be like $3,000 for a loaf of bread, when do we call it quits? You know, when do we give up and say, hey, let the damn market be free and do what it does? Insane. There's a lot of tangents to go on there, man. We could talk about this forever, but in all, price action is going to serve us well, and as long as it keeps us ahead of the curve, we don't have to give a damn what happens to the dollar. We don't have to care, you know, where the market goes from here. As long as we have the opportunity to trade it, we're good. Definitely makes it challenging, but it's not impossible. All right, my wild tangent rant is over. Put that back on at 200.
That's what I love about learning this from you, you know, TA versus fundamental analysis and all that, because it's like there could be all kind, like there could be manipulation, there could be conspiracies, all these different things happen, but it's not hidden from the chart,
Right.
you know.
The
So
chart
it's like
does
you
not
just
lie.
follow along with it versus trying to beat it. You know,
Right.
it's like if you guys are getting into this, we're getting into in a smaller amount.
Yeah. And it's just like, you know, we kept saying, like, the chart never lies. I don't care what the fundamentals do. I don't care what the news says. The chart shows it all. It knows where all the natural levels should be. It usually tries to return to a balance somewhere, and typically it's a balance between how much QE is pushing it, whatever they're tapering it now. All the policies that affect it are just, to me, it's just a whole bunch of uselessness. It'd be better just to leave the damn market alone, but that's just my opinion. I like the price action. I like what the potential for my price action to serve me can be. It'd be great if the the crash prevention team would let it go, but all we could do is trade the chart, and the one fundamental that doesn't change is the chart never lies. It's always truthful. It's always going to tell us exactly like it is. Anyway, I'm going to sign off of YouTube. I've got about 20 minutes here to eat my lunch real quick and get ready for a little bit of collaboration with the folks at Money.net. I'll get some links out for the videos we're making. We're making a series basically going over all the details of the wheel trade strategy. And when that's all built, I'm also going to go and elaborate and write a whole bunch more material about it too. So I think the market at some point, when it does show us that the bottom's in, and it does show us that we've got, back to a natural, slow tapering, non-manipulated trend that we can actually trade the wheel trade strategy on, we're all going to love the wheel trade strategy. And until then, we keep scalping and day trading until it's ready to tell us to go and take some long positions. All right, then, YouTube. We'll see you guys next week. Have a great weekend. And sorry it took so long to get everything out today, but we had a lot to talk about.